Anchor bank will be Punjab National Bank in the first merger that I announced, where the amalgamating banks are Oriental Bank of Commerce, United Bank of India. Business size is 17.94 lakhs. PSB rank by size would be second, and the particular computer networking, fintech networking is Finacle. Similar, Canara Bank and Syndicate Bank coming together gives us a bank size of 15.2 lakh crores, becoming the fourth largest. iFlex is the system that they use. Union Bank of India, together with Andhra Bank and Corporation Bank, will become the fifth largest of the banks, public sector banks, with 14.59 lakh crores for their business size. Then Indian Bank with Allahabad Bank reaches the business size of 8.08 lakh crores, will be the seventh largest bank. So we had already talked about SBI amalgamated earlier, Bank of Baroda amalgamated earlier. So the consolidated PSBs for strong national presence and global reach, one of the objectives with which we went about this consolidation plan. So 82% of all PSB business will be with these banks. 56% of all commercial bank business will be with them. We shall continue with two banks which will have national presence. And they are Bank of India with 9.3 lakh crores of business size. Central Bank of India, 4.68 lakh crores, will continue as Central Bank of India. So two of those banks continue to be with national presence, and they continue to flourish in those. With all our support, we'll extend everything else. To strengthen the regional presence, some of these banks continue to have their dominance in regional areas, and they shall continue to be where they are. Indian Overseas Bank will continue their presence largely in South with 3.75 lakh crores. UCO Bank, with their presence in the East, will continue with 3.17 lakh crores presence. Bank of Maharashtra in the West will continue as it is with 2.34 lakh crores as their business. And Punjab and Sindh Bank in the North, particularly in Punjab area, will continue with 1.71 lakh crores as their presence is very solid. Now, this is something which is a tally which you need to notice. In 2017, when there were 27 public sector banks, today, after today's announcement, this comes down to 12 only. So 12 solidly present, well consolidated, energized, adequately capital endowed banks will now operate to target our 5 trillion economy and give the necessary support for the banking facilities which is so required by our customers today. All right, now have we just thought of these consolidation without giving the necessary energy to the banks? Governance reforms is what all of us have been talking about for quite a long time. Did we do anything on it? Are we doing in trickles? Here I'm happy to tell you that we've taken adequate care to consult and take everybody on board much before we are coming out with the announcement on governance reforms in banks. These, I think, as much important as the consolidation announcement itself are, today the governance reforms that we are announcing now before you are of great significance to make these banks run professionally. And therefore, I draw your attention to the various governance reforms that we are announcing along with this consolidation. To make management accountable to board committee of nationalized banks to apprise performance of GM, general manager and above, inclusive of MD, will happen. So now it won't be just one person deciding on the appraisal of top officials. It shall be management which shall take these appraisals forward. So it won't be left to the hand of one person. And to make span of control manageable in large PSBs, post-consolidation, that is post today's announcement, boards will be given flexibility to introduce CGM level as per business needs. So we shall allow them to form or take a call on introducing a CGM in their respective banks. And also to recruit, this is very important. Just only State Bank of India probably very recently had this, but to recruit chief risk officer from the market at market-linked compensations, but not on salaries decided by government. You will have specialized risk officers from the market deciding on what the bank's spread of its activity will be, and they will be adequately empowered to take a call on the decisions of the bank. And then to enable a succession planning, boards to decide on a system of individual development plans for all senior executive positions. What would this mean? It would mean that for each of the senior level position, there will be a set of 2 or 3 people who will also be built so that they get expertise in that area and be ready to, if there is a need, be able to take that position on. Of course, there will be yet another process of recruitment and selection, but at least we will be building capacity so that you have greater number of people who are with specialized skills and experience. So we are at this time itself giving enough material and freedom for them to have a succession planning within banks' boards. To ensure sufficient tenure, boards given flexibility to prescribe residual service of 2 years of appointment of GM and above. So nobody gets appointed for just a month or 2 because they are senior most, but they will, once appointed, be there at least for 2 years so that there's a sense of continuity, and by the time they get to doing something, they're not going to go away. So these are some of the serious governance reforms that we want to bring in. In again bringing another set of reforms, we want to make sure that the bank's board committee system itself gets strengthened. So flexibility is being given to boards of large public sector banks to enhance sitting fees for non-official directors. They were being paid pittance. So many of these people did not even have an interest being in bank boards as official, non-official directors. Now the boards will be given the flexibility to get the best in the field and give them the pay that they need for sittings. For better board committee functioning, boards given mandate to reduce or to rationalize board committees. In some cases there are very many, in some there aren't as many, so they will be given the complete power to decide what the size should be ideally for them. And for risk management committee, we are giving the mandate to fix accountability, which is what is the main problem. For compliance of risk appetite framework, that is where we are also getting somebody from the market with adequate remuneration, and they will be given enough veto power to take a decision or to veto a decision from being taken. Longer term for directors on management committee boards, because most often, as I said earlier, they spend a short period. By the time they can effectively understand and do something, they're gone. So we are giving them longer term. The last point there about the strengthening of the board system, board committee system, is the management committee of the board loan sanction thresholds have been enhanced by up to 100%. So if they had an X amount this time, they would be having 2X, to enable focused attention to higher value loan proposals. So this gives them the additional strength and power to go ahead with higher value loans. So further on the governance reforms, non-official directors' effectiveness is something which all of us have been questioning, discussing. We're trying to bring in some strength there. So the non-official directors' functions will have to be now comparable, analogous to the independent directors. So that's something which is happening now. Boards are given mandate for training of directors, both for the induction and for specialized purposes. Boards are given mandate again to evaluate the NOD, non-official directors' performance annually on a peer review basis. Thorough professionalization is what we are aiming at by doing these. The next is about leadership development in banks. Executive directors strength in larger banks are raised to 4 for better functioning, focus and also thrust on technology. Particularly on technology, we would ensure that there is an executive director who completely focuses on that, because the cyber security risks which banks face is also something which leadership should be consciously seized of. Creation of leadership pipeline under the BBB, the Bank Bureau, leadership development program is also being introduced. So with all this, the public sector bank and their drive, we are going through wide-ranging reforms. Financially stronger PSBs are the ones which